All right, so welcome everybody. Happy New Year. I hope everybody's going to have a really prosperous new year. And we're here today to unveil some of the secrets from trading. And it is an amazing event that David put together right in the first week. All right, so just to start off, feel free first to drop off all the symbols for me in the chat box. And just a little bit about myself for those of you that are new here. My name is Anka Metcalf. I'm the CEO and founder of TradeOutloud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and invest. I have been a professional independent trader for the last 25 years. I day trade and swing trade futures in the power hour. And yes, I find all my swing trades for futures, that is in the power hour. I also am very active in swing trading stocks and ETFs. In fact, I would say that I'm more active in swing trading stocks and ETF than anything else. And this is actually something that I absolutely love doing because it literally unchains you from the computer, and also investing in stocks and ETFs. And we're going to have a brand new course that is going to come out super soon. So be on the look for that. I have been in investment banking for over 10 years prior to becoming a professional independent trader. So I come from the same field, and I specialize in high velocity trades. And I'm here right now to actually discuss your trades. Okay, so while you guys are still dropping some symbols in the room, I will be taking a quick look at the SPX, which I think it represents the broader market. And I think it's in a very interesting place where it is right now. And on this technical chart, you could see the analysis that we have done throughout time, actually, since the bottom that was actually set in 2024, in August of 2024. So you can see that we're still into a very bullish market environment. And the reason why I have the SPX first here is because I think it's very important to correlate the stocks that you're watching with the general market activity. It is very important in what way? In the way that you need to be on the right side of the trade. So in a bullish market environment, find the strongest stocks, find stocks that have relatively higher volume and that have higher market participation, because you don't want to be a sitting duck in your stock. You want instant profits, right? You want that really good follow through into your stock. And the best way to do it is have it in sync with the market in general. And this is the spider, is the SPX right here. SPYs have a totally exact same carbon copy type of pattern. So what we can see here is the presence of higher highs. And by the way, this is the daily chart. And you can see here that we have the higher highs, we have the higher lows right here. And this is a very interesting pullback that we have executed, that the market has executed, because it has revisited a prior low from November, from mid-November of 2024. We had a rotation that has happened right before Christmas. And right now, towards the end of this week, we are trying to form the triple bottom. You could see it right here, triple bottom. This whole platform here has a lot of substance because it's in sync with the trend. We have a prior pivot high here that has set the tone for these triple bottom formations. And we are right now approaching a super interesting buy zone right here. Now, do I think that the market is going to start ripping immediately into next week? Keep in mind that, funds have been on a break, have been on holiday, and they're still on holiday. These are the algos that are reacting right now. There is not one trader or investor that is sitting on their desk right now saying, oh my God, I got to buy NVIDIA today. So the volume in the market, you can see that is relatively lower. It has been very low since December 20th, since we had the FOMC pullback. And you can see here that is relatively low. It's actually lower than the median volume that we have generally in the market. Also, keep in mind that we are literally almost a week away from earnings season. That is going to be the bigger catalyst. And of course, the economic releases that are going to pop in next week. So take a look at those events, but investors and traders in general, fund managers, portfolio managers, they're looking into earnings season. They want to have the first insight into financials. Obviously, JP Morgan, Citi, Bank of America are going to be the first banks that are going to report. And once we see those numbers out, I think it's very important, because when you have the financial sector that is healthy and robust, you're having a healthy market. You're often going to see that when the market is lower, financials are lower, and the other way around. When financials are starting to have issues, they could drag the whole entire market with them. So pay very close attention to what is going on into the financial sector. But definitely here we have the all-time highs that we set a record beginning of December, and then now we formed a lower high. So we have to be on the lookout, because if we break this triple bottom effect that we have, there is a strong possibility that we may start retracing lower, and we have another minor support zone from this prior high from the September 27 into the 5780 zone. And if 5780 zone is not going to hold, then we're going to get it for a full retracement back to the 5680. Again, the market still is powered up and is geared up from the technical standpoint into a continuation higher. So this is why we are right now trading a little bit higher today. The level that I see that we could be with higher odds to the bullish side into the complete buy zone is once the price gets over the 59.40 level, and it will be around above the 50 SMA right here. So as you can see here, the 50 SMA became the coiling point for the S&P, as well as back into November. So I'm bullish on the SPX. If we break above this 59.45, 59.50, this is going to be extremely bullish, with continuation higher into the 60.24 and continuation higher into the 6100 into the short term. And if we have everything in sync with financials, then remember S&P has a lot of financials under it. It will have a really high impact into the market and into the index. All right, so this is my bias for the market right now. The market could potentially go extremely higher. I will have an event that is going to be tomorrow that I'm going to invite you to. It is going to be a free event, and it's going to be the forecast for 2025 in the major sectors, into some of my favorite stocks that I'm going to be looking for to profit on in 2025. And of course, we're going to take a look at all the market indices, and of course, some special plays that we can potentially have for 2025, and some incredible sectors that I have on watch. But more about that towards the end of this presentation. All right, so we're going to go right now, and we're going to start. The first symbol that we have is ADUS, and Tom is posting this. Okay, so ADUS, I'm going to go top down, and I am going to go all the way far out into a quarterly chart. And the reason why I'm doing this is because we are exactly at the beginning of the quarter. And this is the time when you should be analyzing yearly charts and quarterly charts. Even if you're not an investor, and if you don't plan on holding a particular stock, for example, like ADUS, it is very important because the setups that they are presenting. So right here, I already identifying the possibility for a traction higher in ADUS, contingent on the price action throughout this quarter, breaking above 134.32. And this will represent a potential bull sandwich breakout that may take the price higher. And you're probably going to wonder, it's like, okay, how high is this going to go? Well, let's look at some projections from the quarterly. This a little bit longer term. I'm going to do some projections, some short-term projections here, but the longer-term projections are 145 and at least 166 going into this quarter and perhaps into the beginning of the next quarter. Totally doable into 2 quarters right here. So a target into the 166. Now, when we go to the monthly chart, we're already seeing that we have a massive consolidation going on here. And if the consolidation is going, and you can see here that we still have this level that is traced from the quarterly chart, which will represent a massive a trigger point that could potentially trigger. So a lot of funds, a lot of portfolio managers will be interested at that level along with algos. This 134 is still here and still is the name of the game. Now, last month, the month of December, we have closed with an inside candle. That should suggest compression. It is also an indecision candle. So you can see here that we have two indecision candles. But what I do like about this pattern is that it pulled back to the minor support, a little bit above the minor support zone. You guys can see here we have a prior high and the price action pulled back into the prior high. Whenever we have these type of pullbacks into the minor support zone, it shows us that the trend is still intact and very, very powerful. And in fact, into these minor support zones, you could only buy. So this is a very, very strong. It is a holding above the 10 EMA. I'm using the 10 EMA. And by the way, if you're wondering what kind of indicators do I use the 10 exponential moving average. I use the 20, the 50, and the 200. And of course, volume. And what I'm seeing here is that if we start breaking above the month of December high, and December high is 132.47. So you could have an earlier entry. So you could actually get in what the way I would trade it. So I would get in, let's say 132.50, above 132.50, and I would add, for example, over 134, and I would add a little bit more above this high of 136. This is the all-time high right here. So it does have a lot of room to go higher. Like I said, use the quarterly projections because we are in a range-bound market here onto the monthly. The weekly chart shows massive, massive, massive hold into the pattern and the price action. Again, a little bit noisy onto the weekly. It's still back and forth. This is still the breakout zone right here. And from the daily, you can see it here on the daily. Daily is a little bit more noisy. So when I'm doing any kind of swing trades, I like to go a little bit far out, especially into the beginning of the year, and go for the yearly charts, quarterly charts that are going to give me a much better analysis and a much better clue as to what the price may do, because I want to sidestep the noise. But definitely onto the daily, if you're looking into micro analysis onto this, your guide is going to be the 200 SMA. Notice the fact that it has a great affinity and a love for the 200 SMA. It pulls back, and it pulled back here in November of 2024 to the approximate level, to the 200 SMA. And it previously has done that before in April, and a massive consolidation here for in the month of through January through February that I'm seeing. It was trading under the 200 SMA in October 2023 all the way until the breakout of November 8th of 2023, and then it balanced around. So it has affinity to pull back to the 200 SMA, is pretty much ignoring anything else. At times when it breaks out, and you could see here that this is where it happened, once it coiled around the 200 SMA, it started to pop, and then it started to trend around the 10 EMA, 20 SMA, and into the 50 SMA. The fact that it's not having a linear ascent, it shows me that the stock is a little bit more volatile, and it shows me that the volume is not that great into it. So for me personally, I don't like to trade stocks that are, that don't trade at least 1.5 million on a day-to-day basis. But again, if you're holding it for long term, this is going to be it's an okay stock in my opinion. Now we're in the middle of the transition towards earnings. It will report earnings on February 24th, so you still have a lot of time in order to trade it. Keep it in mind, if the setup is occurring as you're getting closer to earnings, I would just, kind of like back a little bit and stay away from it until after earnings. I'm looking at the reaction into earnings into the last 3 earnings sessions, or even 4 earnings sessions. So it popped up, it navigated higher than full retracement. So it goes, it pulls back always into the earnings cycle, in the middle of the earnings cycle. And then here it reported and it went higher, reported and it went higher, reported, and then remained range bound. So it's your decision whether you want to hold into earnings or not, or if you want to take an earlier. It's actually a really good a pattern for the trade. It's just the only problem that I have is with the volume, with the market, with the participation. So that's the only reason why I would personally not get into it. But other than that, if you're intending on holding it for swing, or if you want to do options or anything like that, I don't do options. It may be a good idea. All right. The next one is SPOT. So I hope that was an okay analysis for you. And okay, the next one is spot. Okay, so spot again, low volume. I'm not a fan of it, but okay. So other than that, quarterly is extremely bullish. A double bottom with an explosion higher. We broke above finally the first quarter, the first quarter of 2021 high. So it's engaged higher. Let's take a look at how many green quarters it had. 1, 2, 3, 4, 5. And we have just opened the brand new quarterly candle, and we're trading a little bit higher. So that's very positive. Again, like with the prior stock that we have analyzed, it is setting up so very bullish. It's in sync with the market momentum. So I do like that. Spotify is one of my favorite stocks as well. However, keep in mind that it's into a very tricky zone. So if the price action is going to start trading below this 440 level, it will start retracing, and the retracement area will be around $390. So if it will retrace, this is actually considered a very healthy retracement. Again, this is on a monthly chart. It had a massive move to the upside. However, notice that it's very extended from support. This is confluence support into the 390. So there's a very strong possibility that if the stock is going to start breaking $440, the price action will pull back to about $390. Now, I like the possibility of a breakout here, and obviously the break is going to come above, and it's still going to be the same pattern as with the prior analyzed stock. It's going to be a sandwich breakout, and the sandwich breakout would come over $500. Notice that the price action was literally driven into the whole number. And this is one of the stocks that absolutely loves to react into the whole number areas. Because if you notice here, back when it created a high in February 2021, it came very close to the 400. And then when it pulled back here, it pulled back and it started to stabilize around the $100 mark. Now, when we go to the weekly chart, you can see that the price action was extended. The 10 EMA dragged it back down. It has that role of creating that magnet point where it pulls back the price. If it gets super extended, it pulls back the price right into it. And we today actually we got a rotation trigger into it, and it's probably on its way higher. I would monitor and see how we close today. And potentially going into Monday, this could be this could be a buy over this weekly high. And from the daily, like I said, today was the day when it finally broke out a little bit. The daily is still not yet into the clear. That's the reason why I would wait for Monday. The other factor is also a little bit of volume coming in. Take a look at the very low volume that we have right now in the market. In fact, we're trading like less than half of the regular normal volume. We did have a more of a pullback here on December 20th. Of course, the FOMC created this pullback for a lot of stocks and created a little bit of panic sell. So but then the market has calibrated again, and the spot has calibrated again. It's actually trying to move right now above, and this 50 SMA is holding the price actually really, really well. And remember that investors and hedge funds always look at the 50 SMA, and they love trading in sync with the 50 SMA. Anything that is above the 50 SMA, they consider a buy or a good buy. Also, the 20 SMA here, the fact that it's declining and the fact that we still have these lows right here creates a little bit of a problem. That's why we are going to get the clues as to whether it's going to be a buy or a sell going into next week. So into next week is definitely a buy over this week's high, whatever the high is going to be this week. And wherever we're going to be closing at 4 o'clock, and we could see a continuation higher back into these prior highs if you're looking for a short-term swing trade. For example, the stop will be just below the 50 SMA. And this is my analysis on spot. Sabina ENPH. All right, so we're going to start again top down because it's so important quarterly. This stock has not been performing really well. It has been downtrending, and it has been downtrending since the second quarter of 2023. So it has been downtrending seriously. And usually stocks that are downtrending, they're usually subject to January effect. So let's see right now, smaller time frames, if they're showing a turnaround. Again, volume is pretty weak on this one. The price action is downtrending, is below the 10 exponential moving average. We also have the price below the 20 SMA. Still a little bit here above the 50 SMA. Not very convincing being the quarterly. It has a lot to prove before it becomes bullish. 150 to me is the bullish level for the quarterly. Also, you can see that the price action and the stock was sold into the year end, and this is for tax reasons. And if it was to find some buyers, January would be the month where it should start finding some buyers. I don't really see that it's getting into the bullish side. It's not so extended. It's not as extended to the low side to say it's going to perform a short squeeze. So it's still very shallow. Inside bar shows compression. Anything that trades below $65 is going to be toast and full retracement back down. So it has a lot of room to the downside to about 20 bucks. The weekly chart is, again, under all heavy moving averages and has been basing for a very long time. Under 65, bearish, and I'm not seeing a bullish side on it. For in the meantime, like I said, this is still that 65. On the daily side, if you're looking for a day trade or for like an immediate, let's say, even though there are probably 6,000 other stocks that are much better than this would be painful to trade. You would need to see it, even if it's going to start grinding higher. So it's from, let's say, like 79, maybe it's going to go to around 78. 78 is a very heavy inflection point. And you can see here that it's heavily to the downside, right? You can see it right here. Okay, so it's heavily to the downside. It's just, it could potentially get rejected here. However, if it's going to start trading a little bit above this trend line, it may catch a bid all the way to around 77. Okay, so this is my take on it. Personally, I don't like it. I would not trade this stock. The next one is FFIV. Okay, so FFI, we're going to do the same thing. We're going to start with the highest time frame being the beginning of the year, a look at the quarterly chart. So we have a move higher into the end of last quarter with an all-time high, which is very favorable for continuation of the upside. We did have the 2022 dip. This was the buy zone for it, by the way. The 2023 third quarter, moving higher back to the prior high right here. I like the fact that we are holding above the prior high. Okay, so the prior high from 2021, we're holding above it. So this is actually a really good sign. Very extended though, but super powerful, super strong. The monthly chart, you can see it right here. So when we're zooming in, we could see here that we are into this prior high. Here's what I'm seeing for immediate reaction. Anything that trades below 248 is going to start retracing lower, and most likely it's going to retrace into a minor support zone of 220 or even a little bit lower into the 215. So if this is the level right here, and it's actually, let me give you the exact area, the 248. So under 248, that's the danger zone, and we'll start retracing. From the weekly standpoint, it is basing into it. So you can see that 248 is still holding. So if you want to take like a breakdown point, you could actually use the $1 below the 480 the 248. I'm sorry, the 248. Consolidation is pretty strong on a weekly basis. Like I said, watch the close of the weekly. This week, nobody should have been trading. Nobody should be trading. It's a very choppy week. Most of the hedge funds are like 99.99%. They're still on vacation. They're still in vacation mode. They have not gone back to their desk. And volume is going to come back, maybe not even in full force next week, but it's going to come back. once we start earnings season, and that's going to be on the 14th. So next week, expect still a little bit lower volume into the market. And that may be a problem for transition higher. That may be a problem for continuation in trades. That may be a problem for achieving targets, maybe a problem into into achieving targets, let's say, into follow through. That's what I wanted to say, into the follow through. So you're going to expect follow through. You can have the best setup, and the follow through can be very, very shallow. All right. So again, look at this level right here. Basically, it's next week could be bullish over this week's high. And from the daily standpoint, zooming in, you could see a lot of choppy action right here, a lot of volatility with the I was going to say earnings, with the FOMC meeting that we had. Also, notice the affinity off of the 50 SMA. Pay very close attention, guys, to the moving averages because they are speaking volume, okay? And there are stocks that respond to the 20. There are stocks that respond to the 50. That's because they're scheduled like that. That's because their funds are adding into those points. So here we have the 50, here we have the 50, here we have the 50 again. Okay, so this is my analysis for FFIV. You're so welcome. All right, the next one, Terry, is asking about Tesla. Okay, so Tesla, let's start with the quarterly because it was insane. It was the best quarter on record for Tesla. You could see it right here. It had a massive move to the upside. And also you can see that the price action is holding into the minor support zone deriving from these prior highs from the first quarter in 2022. All right, so let's zoom in. So I'm a definitely continuation pattern, a little bit extended. So be very careful with this because this could be a yo-yo trade going back and forth, and it could pull back into the 300. So keep that in mind. Let's take a look at some levels to see where it's at and where those pullbacks can happen. So as you can see here, we have an inside month, right? The month is very young, only 2 trading days so far, right? And this is actually the second trading day of the year, so very young, but we're still holding into the prior high right here. The weekly tapped into the 10 EMA. This could potentially be a super buy going into next week. Let's say next week we're going to break above the 428. That's going to be a strong buy point. It's on trend, so we have a nice fanning out of the moving averages. So we could see a buy over $428, and we can actually place a stop below this 10 EMA into this area. I'm usually, when I'm trading Tesla, I'm giving it a little bit of more of a wiggle room for my swings because it tends to be a little bit more volatile. And as we're approaching inauguration on January 20th, expect more volatility to hit the market into that point. And the daily chart, you can see this is the trigger level for the weekly. I like to look at weekly charts for triggers that are more powerful. However, I do like to leg in trades almost in some power trends from daily charts. And I like to use the daily chart as to scale in or initiate a position. But this would be like a scale in type of trade. Be very, very careful about this level right here because this is super interesting and pull back into the minor support created by this double top high and the base here. So it shows price compression, price holding. And the pullback here, even though it has a high and a lower high here, it has the potential of reversal. So half the size could be initiated above today's high, whatever today's high is. Maybe it's going to be 397.55 the way, or 396.55 is actually the high today. It could be whatever the high is going to be today. That could be a buy for Monday above this, and you could use this area for the stop right here, this blue area into the 365 zone. And this is going to be like half the size because we don't know yet if the price action is ready to tackle 10 EMA and the 20 SMA and break above, because that's not only the problem. The problem is going to be this level right here with, you see this low. I could actually mark it and see the exact level it's at. It's the 410 level. So if the price action is going to take out the high of today on Monday, it will go through the 410. It will go into the 410. At 410, there's going to be a big question mark because we don't know if the bars are going to be ready to take out that low. Because, and that's the reason why I would initiate the trade with half the size. It would give you like, a good chance to get into the trade, not risk a whole lot. But then again, if it breaks the if it breaks the 410, I would add into the 428. Okay, so half
Hey,
size in.
hey,
This is
Anka.
what I would
Sorry.
do. I'm not giving any suggestions, but I would look at today's high. I would get ready to buy Monday above today's high, above. So that means not at the same level or somewhere in between. Only if it trades above today's high, and I will look for a first target into 410. And I would you could actually take some partial profits quarter size, and you could have the half size. You could have the quarter size here, so you could be half size again, or you could be whole size here. And then again, look for a target
Anka.
back into these highs. And this is my analysis for Tesla. Let's take a look at Google.
Hey, Anka. Anka.
Okay, so Google is actually, let's take, okay, Google Alphabet right here.
Anka,
Google
can you
very
hear me?
strong. I hold a position in Google. I do like it. Strong consolidation onto the daily, and it looks like it really
Can
wants to
anyone
go
hear
higher.
me? Anka, are you there?
Oh, sorry. Yes.
Okay. Sorry, I gotta cut you off there.
Okay, thanks so much, guys.
All right. Thanks, Anka.